Hello, Smart Money Cheap Podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with Doug Hagren. Hey, Doug.
Hey, Kirk, it is good to see you. It's been a couple of weeks. Good to be back.
Yeah, good to have you back. And you guys had a good Thanksgiving, huh? Your team did okay.
We did okay. We did okay. So for those out there, some will be offended, some will not. But we are, I live in Minnesota. There's lots of woods and there's lots of big animals walking around. And so Wisconsin opener was right before Thanksgiving. It was a good year, lots of deer, lots of good time with family. And then on top of that, I did something this year because I was going to fry a turkey, which I have done before. And it takes a lot of time to fry a turkey. It takes a lot of, and a lot of that has to go into it. And honestly, the results in the past have been okay. Most of the time, you just can't seem to get a turkey to thaw out quick enough, even if it's in there for like 2 months. It's still frozen in the middle, and then you don't want to drop an ice bomb into a hot fryer. So that's always a big one. Now we're starting to be able to get more turkeys. It's more common to get them these days where they're not frozen. But still, I'm coming back from deer camp. I'm like, I don't have time to get all this. Well, I'm at Costco picking up some different items for Thanksgiving. And I was going to I had in my cart a nice organic refrigerated turkey that I was going to fry. And I turn around and I see that Costco has smoked turkeys, whole smoked turkeys, 6 to 8 hours. It's the best turkey I've ever had, Kirk. We brought it home. We baked it, warmed it in the oven for 4 hours, already pre-cooked from the smoking. It's the first time that my family in the history of Thanksgiving has literally devoured all of the leftovers. So it's just a little public service to all of you out there that want to save a little time for Thanksgiving. Let someone else do the cooking for basically the same price as it costs to buy a raw turkey, but what, 10% of the work and better flavor.
Yeah,
There's my recommendation.
All right, that's a good recommendation. I know we used to locally we used to have a turkey farm a few towns over, and we used to get our turkey there every year, and it was great.
That would be awesome.
Yeah, it was great. You just go. We brought the kids there. There was like cages and cages of turkeys, and they're all running around. It was kind of cool.
Free range turkey, right, Kirk?
Yeah, free range. Yeah, it was it was a good experience. I mean, it was organic. It wasn't, it was just like basically a house where they had, turkeys in the backyard, and you walk into the cellar, and it's clearly they're killing the turkeys down there. But it was a cool place, and we used to go there for years, and you could get turkey sausages, you can get everything.
Oh, nice.
Off season, we'd go there all the time. And so anyway, so they sold that. I guess they got too old. The kids didn't want it, so they sold the whole place, and of course they shut it down, which is unfortunate. So now we just go to the grocery store, which is where turkeys come from, right? They come from the grocery store. Exactly. So yeah, so we did that. We had a good Thanksgiving. We had my in-laws over, and that was fun, and we all had a good time, and it was a good time. It was a good time, and started putting in my rink.
Nice. It's finally got cold enough. It's got cold enough early enough this year to actually do that.
It did, and I wish I had finished it last weekend, but I have to tell you, I was feeling my age because we have a new yard, as you guys know. Listen, and I bought a house a few months ago, and we got a new yard, and where I want to put my rink is not perfect. Yeah. Somebody decided to put a mound with a few trees in it. Like, it's just the weirdest thing. So I had to chop down the trees, and I had to dig up the mound, and I couldn't get it all because I had my son out there. Like, we were both like, what the hell? Like, it was a lot of work. So anyway, so I got to do some more this weekend. I want to get the rink up. I'm not sure if it's going to work or not, just based on the timing, but we're going to try. It's getting kind of cold. The ground's getting a little hard. So the rink, we're going to do our best, but we know this year is just going to be marginal. But actually, if we get rid of the mound, the rink will be reasonable size, a lot bigger than I thought it would be. So I'm excited about that.
I mean, you could always flood it with twice as much water, and the mound won't matter anymore. Just kind of.
No,
it's you have a raised rink, I guess.
Well, so what's interesting is we have a. So I learned a lot about this house from the neighbors, and apparently, when they developed this neighborhood like 25 years ago, and all the houses were built, there was a big to-do about this house, and the house was almost not built because apparently there's this thing called a vernal pool. I don't know if you've ever heard of this, Doug. I never have, but apparently it's a big deal in the environmental community, and so a lot of hubbub, and apparently the contractors got their way because the house was built, but a lot of peepers come up in the spring, which is kind of cool.
Okay.
So everyone's afraid of the environmental overflow and all that, so that they have a lot of rules, which I get and I appreciate because I live in the woods now and I appreciate the environment because I'm in there. However, some of the rules I look at, and some of these rules are old because around here, what used to be wetlands, well, when the water table goes down, they're no longer wetlands. So, you know, we have a lot of land that we can't use. And so I'm curious in the spring if they actually are wetlands or if it's just formerly wetlands, formerly known as wetlands, now just, grass. And so we'll have to see how that all pans out. But we want to do some work on our yard and we have to ask permission for everything now because that's the way the state works in the environment. You have to ask permission to put a shed in your yard. You have to ask permission to all this sort of crap. But anyway.
Well, and did you hear at the same time they've decided half the countries are now pulling out of the environmental accords, and we're back to deregulation. We're about to get Toyota pickup trucks that are probably get four, that are going to be cheap. They're arguing that they might be ten to $20,000 a truck and get you probably 5 miles a gallon. But hey, it's back to the days of big energy, and we've talked about this before, Kirk. It's funny when they want to get all that energy for all of those data processing centers, all of a sudden the focus has changed a little bit.
Yeah. I mean, we talked about this in the show. We talked about you and I talked about this, Doug. It was
Yep.
Last summer, I think it was.
We did.
Or 2 summers. It was no, sorry, last fall. It was about a year and change ago, where I think for 3 months, it happened, I think in June, and we talked about it. We said, isn't interesting. They're no longer talking about the environment. All talk, all propaganda about and I say propaganda because everything is scripted now in the news. There is no news. It's all propaganda. So to be clear, but all the propaganda around the global warming and climate change and all that crap, it all literally stopped. And you and I were talking and we were like, isn't that interesting? Like, why are people not talking about this? And we didn't know why. We suspected, but we didn't know why. We're just like, that's weird. It's just a very weird thing. 3 months later, after the talk stopped, Biden came out and said, we're pro-nuclear. We're going to reduce regulations, which, maybe they'll listen to the show because we've been talking about that for years. And they came out and said, oh, pro-nuclear. And I was like, isn't that interesting? All of a sudden, the environment's no longer important. And then the election happens and all that. Greta Thunberg is now no longer focused on the environment because it's no longer an existential crisis, right? This girl whose whole life is she's the figurehead of the environmental movement, and all of a sudden none of that matters. Now she's interested in voting. Mm-hmm. It's like, come on. Bill Gates came out a few weeks ago and said global climate change. I keep calling it global warming. Sorry, you all you people who care about that. But the climate change is no longer an existential crisis, according to Bill Gates. What did we miss, Doug? Was there a piece of news that we missed that all of a sudden all the problems were fixed? Or was this all bullshit all the time?
Yes, we missed the news where they said all of a sudden that they're going to need way more energy to run AI than they thought they were before.
Right. And that's the answer, right? Is that we could talk about all the theoretical tinfoil hat stuff, but the reality is the tech bros needed power. And when the tech bros want something, they get it, right? When the tech bros want clean environment, we get that. When they need power, we get that. Because they're the ones paying the bills for the politicians. They're the ones paying all the lobbyists. I mean, let's be honest. That's how this country runs. It's how it's always run. And so now they need energy. So it's turn on the spigots, full bore ahead. We're going to get all the energy we can. And by the way, I'm just going to speculate here again, because that's what we do, is that energy is going to remain low until after the midterms. Why? Because low energy equals low inflation, and Trump wants the party to win, and that's what's going to happen. We called it here first, whether you like Trump or hate Trump, that's what's going to happen because it's in his best interest to do so. So energy prices are going to be really low. We'll see what happens after the election, but at least for the foreseeable future, energy prices are going to be low. So I'm I suspect that if you're looking to invest in energy, you probably have about a year left before it's going to really matter. But at some point, energy prices are going to start to pick up. Right now, we don't have enough energy, and we have questionable whether AI is actually doing all the things people want it to do. But we're kind of at the cusp of a bubble here. Like AI bubble is, I'm not sure if it's going to pop. You hear people in both camps. AI is going to the moon, or it's a bubble and it's going to pop. I think both can be true. I think it could very well keep going to the moon, and then at some point it'll pop. I don't know if we're there yet, and I have a suspicion that we're not. Right now, we're at a point where people are really negative about it, so it's unclear whether it's going to pop. But I would put the probability as it popping right now is probably like 20%. It's there, but I'm not betting the farm on it. Let's put it that way. But I would be very cautious. I think the challenging time that people are having right now, we talked about in the last few weeks, the K-shaped economy. The K-shaped economy is where the rich get richer and the poor get poorer. And if you have assets, good for you. If you don't have assets, I feel sorry for you, because that's the economy we're in. If you don't have assets, you're getting screwed. If you have assets, you're going up. And so if you're poor, get assets. I mean, that's really the answer. I mean, there's no other answer. So I expect that we are probably going to continue to see this K-shaped economy, which for all intents and purposes means that the stock market's not going to crash. But if you want to, I don't want to say a stock tip, but if you want to tip about stocks, how about that? We're heading into the last month of the year, or we're in the last month of the year. And what tends to happen in December is this. There is a ton of tax loss selling in areas that are really beat up. Now, we have a lot of those this year, even though markets are at all-time highs. We still have a bunch of areas that are really beat up. The restaurant takeout sector is really beat up. You have, what are the worst sectors now, Doug? You have consumer goods. We've got, energy is not doing great, but they're not bad. Biotech actually turned around. But if you look at the sectors, and not just the major sectors, but even subsectors, like healthcare get beat up, but they're coming back pretty strong. So if you look at the sectors that are not doing well, ones that are really beat up, and takeout restaurants are big and consumer goods are big. Basically anything that the quote unquote poor people or the lower end of the K are contributing to, they're really hurting. So that's where you want to look right now, because people who are invested in these companies are saying, you know what, now's a good time to sell out and take my losses, carry those forward, and offset any gains for the year. So this happened in, I think, 22 with crypto, where it bottomed out. I think it was 22 or 23, but it bottomed out and everyone was selling everything, and the price got really low, and it was a great time to buy. December 31st, best time to buy that year, because it was a low point. And then what happened? January 2nd, all of a sudden things started going up again like magic. So there are times of the year where this happens, and you have to be really on the ball. It happens at the end of September, because hedge funds, they have the year-end things, and they try to make things look a certain way with window dressing. So the end of September tends to be one, and the end of December tends to be a good one. So what I would suggest, and here's a big tip for the week, look through the sectors and subsectors of the stock market over the next few weeks. Find the ones that are the most beat up, and look for accelerating drops into the end of the year, because the Santa Claus rally is really the end of after Thanksgiving until January. So you tend to get this huge run up in December. But if you see sectors like running down, not just low, but even continuing to drop, those are the ones you want to look for, because those are the ones that are getting tax loss selling, and you have a high probability of January 1st things starting to go your way. So highly suggest that you look at those areas, and I would actually put on trades for those areas going to the end of the year, because you have a high probability of things going your way. So that's my kind of tip of the week. And if you haven't done this, spend some time this weekend and do it. I think you'll be very thankful you did, because you will be able to find some areas that you like. I'm identifying a bunch of areas right now that I like, that are very well priced, and you can actually find bargains in this market. I was surprised. I've been able to find a few. This is a public service announcement. Hi, my name is Kirk Chisholm, and I'm with the government, and I'm here to help. Doesn't that sound reassuring? Well, let's talk about how they're helping. The government needs your help to make our money worthless again. PPP loans, student loan forgiveness, helicopter money. Let's keep the party going until our money is totally worthless. Don't think it can happen? Sure it can. Just ask Zimbabwe, Venezuela, Greece, Germany, Hungary, Greece, Yugoslavia. Did I say Greece? As a loyal listener to their show, I want to give you free money. I'm giving away free money in one of these hyperinflationary currencies. Go to www.moneytreepodcast.com/free money and follow the instructions to get your free gift. I have a large audience and only a limited supply of these currencies. I'm not the Federal Reserve, so I will run out at some point. Make sure you get yours before I run out. Go to moneytreepodcast.com/free money. Follow the instructions and get your free money today. I don't know. What are your thoughts, Doug?
Well, yeah, I mean, you mentioned one of them. You actually talked about Bitcoin a couple of years ago. I mean, Bitcoin has one of those that recently, I mean, over the last 6 months, it's gone from a high of about 123,000 in October 5th, down to as low as 84,000 on November 20th. I mean, talk about. And again, if you're one of those that got caught up in the, oh my gosh, it's going to go to the moon, it's going to a million, and you jumped in when it was over 110, you're feeling the crypto pinch right now. And in this crypto pinch comes fast and hard regularly. And so we are looking, you're looking at almost a $30,000-$40,000 decline in value. Now, and that's happened right there in the last month, and it's holding off. Now, is that going to rally into the new year? Hard to say, right? But obviously, this is one of those things where if you're going to get into crypto, you got to be willing to understand these levels of volatility that are going to occur. And we're not going from 60 to 20, which from a percentage wise is absolutely massive. But 60 to 20 is a $40,000 decline, and we just had a $40,000 decline. So you're going to have to still be willing, no matter what you go in, to be able to face that. Is that going to rally into the new year? Well, it might, it may or may not, but it's certainly correlating to exactly what you just said. It is just continuing since October high to sell down. That has not been the case in other areas. We've seen rallies. You mentioned healthcare. United Healthcare was one that got beat up really hard earlier in the year. United Healthcare over the last couple of weeks has rallied, continued to rally again from what was showing insiders buying at the time when everybody was trying to beat it up. And this is something I think we've talked about, or at least I've mentioned a couple of times. Insiders are certainly one of those variables you can watch. If insiders are selling, it is not necessarily a key indicator, because insiders will sell for any number of reasons. Sometimes it's just they've got to pay some taxes and do some things. The other thing, but insiders buying is almost always bullish. I mean, they're not going to start putting their hard-earned money into their company if they don't believe that company is going to be in good shape, and they see the numbers. So is it insider trading? No, it's not insider. It's not insider trading from an illegal standpoint. It's insider trading in the fact that they get to see and they get to exercise those options, and they're deciding if they're going to exercise those options or not, and buy more. But it's all public record when they do it. So that's how it gets around it. So, you talked about, that, so that's an area that's certainly, that has certainly picked up, as well. Is you got to watch when things get unnecessarily beat down, and the timing. The other thing you mentioned, and you kind of touched on, is this is the time of year where a lot of funds, for example, will have to start selling to, they'll have to rebalance. They'll start to rebalance their funds. They'll also have to start distributing out, distributing out embedded gains. So you don't see this as much anymore, with more investing happening in ETFs. With Robinhoods of the world, you have more people going in directly into stocks. But this was absolutely still a reality that exists, with a tremendous amount of wealth that is still in mutual funds. Is that these mutual funds are allowed to carry, and I forget the exact regulations on it, but they're allowed to carry gains from the buys and sells that they do up to a period of time, and then they have to legally release them and actually pay those gains. And of course, they don't pay them; they pass those gains off to the holders of those funds. So you will see that this is the time of year, and you can actually get this schedule ahead of time. These mutual funds have to tell when they're going to be issuing their capital gains, and then they have to announce what those capital gain distributions are going to be, and that's going to reduce the value of those mutual funds by that amount. And so you will start to see an arbitrary dip in a mutual fund around this time of year that could be a couple of dollars or more, depending on how much it's run up. So some of your higher growth mutual funds, that have had tremendous success over the last couple of years, they're going to have, significant gains. And if you're in a taxable portfolio, you're going to have to pay capital gains on those taxes, both short and long term. If you're in an IRA, you're not paying taxes on that, but you are going to see a dip in the value based on the distributed value from that fund. That's automatically an opportunity to watch. Not saying an opportunity to do anything, but it's an opportunity to watch, because generally it's such an artificial decline that it can allow you to buy a fund, to either make a sale ahead of time before that distribution comes out, and then buy it back at the reduced amount after that distribution. So that's another way to play the game.
Yeah, you mentioned Bitcoin, and it was funny. I was reading some data points this week, and I don't know. Most people don't realize, like, Bitcoin's like down 3% for the year. It's had a great year, and it's down 3% right now. It's crazy. Like and if you look at the price of it, and I'm just going to pull up one of the ETFs here. But if you look at the price of it, it certainly had a sell off, from the high point. And let me see if I can pull this up on my.
While you're pulling it up, yeah.
So right now, here we go. So right now it's around 89,000, but it peaked out about 125,000. So that's down what, like 30%, 33%, something like that.
In a month.
Yeah, and well, it's over 2 months, really.
Yeah, a little bit. It was closer early high. The highs were early October. That's true.
Yeah, I mean, so right now we're a little bit above we were in March, April. So it's not, it's not a huge deal. It's very close to where we started the year, but I just think it's funny because it's had a great year, and then it sold off. Everyone's freaking out. Like, I'm getting calls. What's going on with Bitcoin? What's going on with Ethereum? Like, what's going on all the time? Like 30%, that's nothing. Like, it usually drops like 70% when it sells off. So I guess if you're really concerned, we're only halfway there. I'm not sure that's the case, but I have a very simple framework with crypto, and you have these Bitcoin maxis, and you have these people who are hyper invested into cryptocurrency, and I love the fact that people are in there because it's new technology and that's what drives it. However, I'm not one of these people that are, I'm not a perma bull, I'm not a perma bear, I'm not a gold bug, I'm not a crypto bug. Like, I am very pragmatic, and so I look at like Bitcoin and Ethereum, because those are the only two that I really look at. There's others people like, but you can only look at so many. So I only follow those two. And I look at it this way. If they're really dirt cheap, I buy them. And then they go up 100%, I sell half, and then I keep the rest as the house's money. And I don't care where it goes after that. And then if it drops again, another 60, 70% or whatever it is, I buy it again, and then I sell half, and then I increase the position. Like, you just keep doing that over and over again. It's a simple formula, and you don't need to get crazy with it. You don't need to day trade it and all this stuff. Like, it's fairly simple, but you have to have like a few year time frame. Like, I started doing this in 2017, and but here and again, you go through cycles, and we're going to go through another cycle. We've had a good one. Here's my speculation, and I need my tinfoil hat today, but my I gotta put it on. I can't not do it right now. But if I look at the cryptocurrency market, right? So you look at Bitcoin, Ethereum, basically anything that's involved in like Web3. You have the institutions now officially, now that we have ETFs, they're officially getting into Bitcoin and Ethereum. Okay, and others when they have ETFs going live. So they're officially involved. Now, what do institutions typically do? They typically game the market against retail, against each other. That's how the game's played. And if you don't know how the game's played, you shouldn't play it, right? What's the saying at the poker table? If you don't know who the rube is, it's you. Well, it's the same thing in investing. If you don't know who the rube is, it's you. Like institutions traditionally will take advantage of other investors if they can, because that's how the game's played. And you know what? They do it to each other. So what happened with or what's happening with Michael Saylor, I don't know if you've been following this, but there's been a very concerted effort to push down the price of Bitcoin because his company is basically a Bitcoin treasury company. And he had a big payment due. I guess he was able to make it. I'm not up to speed on this because I still can't wrap my mind around how it's not a Ponzi. I'm not saying it is, but in my mind, it's structured like one. So I can't figure out why it's not. And so I just stay away. It could be perfectly fine. I don't know enough about it. It's hyper complicated. Some people believe it. I'm on this side of like there's so many other things to invest in. I'll do something else. Like I can't figure it out where I can feel comfortable with the risk. However, I like what he's doing if it's legit. I just don't know. So my point is his company is set up where if Bitcoin goes up, his company goes up, and if it goes down, it goes down because he owns a ton of it. And he's taken out a lot of loans, like he's taken a lot of corporate debt out. He's done convertible shares. He's done lots of things. Like he's actually walked through what he's done and how it works. And I understand that part. What I don't understand is how it's not a Ponzi, because basically, if Bitcoin goes down enough, he's screwed. And so what happened recently is Bitcoin went down. He had a payment due, and he had to come up with the cash, and I guess he did. But that's a problem. If your company is based on paying interest and your company doesn't generate interest because his business model is basically holding, that's a potential problem. So, I see opportunities like this and like I said, got my tinfoil hat on. That to me smells like Wall Street trying to game the system to get him to liquidate all his Bitcoin or a chunk of it, which drives the price down, which allows them to buy it up cheaply. That's how the game works. And if you don't know that, now you do. It's a game. And if you think, well, this isn't fair, of course it's not. It's definitely not fair. That's why you have to understand the game. That's why you're listening to the shows. So we can discern this for you and help you understand how the game's played. So if you want to see why something's selling off, sometimes there's no reason. I'll give you a perfect example. So in 2020, let me bring this up. So there are a handful of companies. They're called mortgage REITs. If you've never heard of this, look into it. It's a fantastic area. Now, if you know anything about a REIT is required to pay out 95%, I think it's 90% of their income to shareholders, right? They get preferential tax treatment because of that. Now, a mortgage REIT is basically the REIT structure it requires them to buy real estate or real estate related stuff. So that includes mortgages. And so what these mortgage REITs have done is they effectively buy government guaranteed mortgages in the REIT, and then they pay out the interest to shareholders. But what they're doing is they actually lever it. So they're buying a levered amount of mortgages because they're guaranteed by the government, and they pay out the interest, which many times is like 12, 14, 15, 16, 17, 18%. They're wonderful vehicles, but they're really hard to understand. So I don't recommend this to everybody, but I'm just trying to help you understand before I get to my point. Anyway, so we're in COVID, right? And we're looking at February, March, April, okay, in those parts of the COVID cycle in 2020. Mortgage REITs went down approximately 70, 80%, many of them. And some of the ones, I think Annaly and AGNC only do government guaranteed mortgages. Some of them do non-guaranteed, and they got some weirdness. But those, I believe, only buy the government guaranteed ones, which means they're really, really safe. Now, I'm just talking about risk. Obviously, everything has risk, but generally speaking, they're very safe. And COVID shouldn't have done anything to their business model. Okay. Now, if you look back, they dropped like 80%. So I'm looking at these things wondering, why the hell are they down 80%? It doesn't make any sense to me because they're not affected by COVID. It doesn't matter. And so I called my buddy who works on a trading desk at a fixed income trading desk. And I asked him, I'm like, man, you seeing this? What's going on? He's like, yeah, I know. I see. I don't. He's like, let me ask around. So he asked around. He's like, one of the funds liquidated their entire mortgage portfolio and dumped it on the market. That's why all these things went down like a stone off a cliff. They just dropped like a rock. And then if you were patient, you bought these things and you made like 80% in a matter of 2 weeks just because you looked, you were patient, and you knew what was going on. You knew it had nothing to do with the fundamentals. It was all one Wall Street firm got liquidated by all his buddies, and they just dumped it. And everybody's like, well, we'll take 20 cents on the dollar. Thank you. And if you were smart enough and patient enough, you just bought a bunch of this stuff because you knew it was good and you just waited and you made a great return. But that's the kind of thing that happens all the time. So if you're wondering what's going on, sometimes it's something you can't see. Sometimes it's Wall Street attacking each other because they can, and because they know that their other buddies, across the street, their position is weak, and they need to liquidate because of some odd reason. It might be liquidity or whatever, and they need to get rid of it, and they'll just totally take advantage of them. It happens every day. Every single day this is happening. And because it's kill or be killed. It's a bunch of sharks swimming around eating each other. That's how Wall Street works. So if you're aware that that's how it works, you can take advantage. So that's another lesson for today is if you see something happen, you don't know what's going on, pay attention. Sometimes it might be not a fundamental related thing at all, and you can totally take advantage of Wall Street. This is one of those situations where you can game Wall Street. Just like with the meme stocks did with the, I forget the name. Was it Melvin Investments or Melvin Capital that got liquidated by the
Melvin Capital. Yep.
Yeah. So it's just like that. But in a sense, that was more coordinated. This is just you paying attention. So I think given what's going on in the world right now, it makes sense to pay attention. So that would be my 2 cents about crypto and Bitcoin and all the other stuff. I do want to point some things out. I'm going to give it back to Doug here. There was one thing I meant to talk about last week and didn't, and I think this is actually really important. So let me bring this up. So this is a list of the 60 critical minerals that were carved out by the basically by the government. I forget, U.S. Department of Interior, U.S. Department of Geological Survey. Basically, the government has decided these 60 critical minerals are critical to our national security. All right, I'm going to say this again. These 60 minerals are critical to our national security. Now, if you've been paying attention, which I hope you have, we have a president in office that is very focused on national security, meaning resource security. And so it makes sense to pay attention to this list.
That's why we're annexing Greenland, Kirk.
Well, they may all be in Greenland, Doug, and so we'll see. But if you look at this list, I'm going to name a few. Most of them you don't recognize, and I haven't even recognized them. But I'm going to name a few: uranium, tungsten, tin, silver. Silver. We have,
which, by the way, has spiked again recently, Kirk. I think we might have talked about that
in the last week. It did a spike again. It seems to be it seems the management of silver seems to be coming off the rails, which is a good thing if you're invested in silver. Lithium, magnesium, nickel, palladium, platinum, potash, graphite. Let's see, copper is another one. Arsenic, aluminum. All right, so there's a whole bunch of other ones, iridium, other things that you've probably heard of. But the ones I've mentioned, here's another one, metallurgical coal. All right. So if you look at what do all these things have in common, what they have in common is they're important to our industry. They're important to U.S. manufacturing or Things that we require, there's rare earth minerals in here, which I can't name them all because there's a bunch of them in here. We all know rare earth minerals are important, and Trump has actually our government has invested in a bunch of mines and companies related to these minerals. So here's my point. If you know these are the 60 most critical minerals according to our government, and you know that Trump and his team are going through this list and determining how do we invest as a government, invest into these areas to make sure we secure enough resources so China doesn't have us over the barrel. Now, China's doing the same thing with us because we have them over the barrel too, and I think we all agree it's a good idea to disconnect. But now that that's happening, we have to secure these resources. Copper, huge for us. Silver, it's not talked about, huge for us. Uranium, we know that. I think we have access to enough of that. But aluminum, all these things are important. So as an investor, now that you know that the government wants to buy these and you see that they're investing government funds into these areas, into companies, what should you do? Well, let me tell you what you should do. You should do your homework and find the best companies in certain areas and put some money into them, because it's very possible that the government could buy into those companies. And even if you get it wrong, what's going to happen? The government buys into Intel, and you own shares in AMD. I am pretty confident that AMD shares are going to go up when the government invests into Intel. Not because they're going to invest into AMD, but because people think it is. And they think, well, they're going to buy Intel, maybe we're going to buy AMD, and so AMD price shares go up. It doesn't mean the government's going to do that. And I don't think they would. I think they would just pick one company and support the industry the best they can. Because Intel was not doing very well in its stock prices. And I think that's probably why it was, because they want to keep the company active. But you need to be aware of these things. This is where the money is flowing. And if you learn anything on this show, you got to invest where the money's flowing, because that's where the institutional investors are going. That's where the smart money's going. Follow the money flows, because that's what's going to push stock prices up. I don't think silver prices are over. I think silver is probably going to shoot up to 60 or 70. That would actually be fair value based on where gold is. Doesn't mean it won't go higher, but I think it's more of a fair valuation of where silver should be. But I think both precious metals are going to keep going. I think they both should be a lot higher, and we'll see. I mean, should doesn't cause them to go up. Should, woulda, coulda, didn't. But I think it makes sense to spend some time digging through this list. I'll put this in the show notes. So if you guys are listening to this, I'll put it in the show notes. Go through this list, do some research, and find companies that, obviously figure out where cerium is made, what it's used for, or cesium. Like, figure out what these things are used for and figure out, is it that important? And then go look for companies that do it. Like silver, nobody mines silver. Silver is a byproduct of mining copper and lead and zinc and all these other things. Like, silver is a byproduct. There are not many silver mines. So one of the problems with silver is there's no mines, and they're hard to find anyway. So it tends to be a byproduct, and people don't care about it. It's kind of like, I got copper, like, get the silver out of here. So silver's got a problem in the sense it's really hard to find, and it's a really useful resource. It has antibiotic, I can't think of the word, but it has certain characteristic traits that are very valuable. It's used in solar voltaic. It's used in a lot of electronics. It's a very valuable resource that we don't have enough of, and that's been the current trend. So I don't know, Doug, what else should we talk about today? We got lots to cover here.
Yeah. You were talking about, obviously, silver, popping, and the economy. I just saw something just came in today, and I don't have the quote in front of me, but it's probably important, as you're talking about you mentioned you're getting into you're sharing your screen right now. You're sharing it. Okay. Yeah.
You can see the hockey fight that I
was
looking at.
There you go. So we were, you were talking about the consumer at the bottom, and I think it's really important to note, what's going on there a little bit. That we've got some, we still continue to face some challenges in that world that are coming in really, really heavily, and that is of course affecting a lot of consumer discretionary type of businesses. Fast food is really struggling because the cost of it is, well, this has been the kind of the go-to food, go-to nutrition source for a lot of communities, is now come to the point where it is absolutely strangling for many of these families to be able to afford it. What's interesting is I did just see that it looks like consumer sentiment has actually jumped recently, which is positive considering considering how they were feeling a month ago. Although that does tend to be a lagger, the market is starting to come back a little bit, so that certainly will help. But I think we did get some Black Friday data that came out already, and that Black Friday data was to say the least a little bit of kind of two-handed. There was actually a 9.1 increase of spending from last year. So, I mean, if anybody, if you've heard anybody who's gone out and actually gone physically shopping, which of course is not, is not as common as it used to be, they still are. The feedback is still that you're seeing a lot of stores very packed, a lot of activity going on. But if we look at it a little bit more granular, there was they reported a negative 1% in total item volume from last year, and the prices are obviously 7% higher. So you're going to see a 9.1% increase spend is coming from revenue, and clearly, that just higher prices are going to inflate those numbers and make it look like there's more going on. But the reality is consumers actually bought around 4.1% fewer items. So that's they're reducing the number of purchases, but it's keeping the revenue in line. The big thing, though, is they saw a huge spike in an 11% increase in buy now, pay later use. And this has blown up over the last couple of years. This is the new credit card, where it's kind of like layaway, except it is much, much more costly to do. They said that specific use is up 45% by volume over last year. So what's happening is, that when 11% of all Black Friday spending was financed through BNPL, 84% of all purchases were financed by credit cards. 67% of those consumers are not expected to be able to pay the full balance in the first month. So overall, you're looking at 95% of Black Friday shopping being financed. And ultimately, they're doing it. They're going through it. It's a sign that they're going through their habits, but they're not going through their habits with a financial intent to be able to afford it through cash flow. And that is a laggard, by the way, too. You will see that what they say is habits die hard. So the consumer will spend as they are accustomed to spending, even when they are less able to financially afford it, for a period of time until things break. Because the one thing that they don't want to do, as consumers don't want to do, is you don't want to jump into affecting your household, right? You've got kids are coming up on holidays. You want to make those holidays special. You want to get around with family. You want to put food on the table. You want it to be, look like you're having this wonderful year-end celebration. And so what'll happen is you'll see that even if it is harder to be able to financially afford it, they will still take the easy path of getting it and worrying about that problem later. And I think what we're starting to see, and we've shown this now for a while, is that the amount of consumer debt that's out there has been growing and growing. But we're starting to see a breaking point on the affordability of mortgages. I think I reported last time we talked, something like 60% of all new mortgage refinances have actually been denied and declined. And so, banks are basically telling people, we're not going to let you get out of this current situation. And we are starting to see that, if we're starting to see more denials of approval, not only refinance, but even things like home equity. One of the things that I'm a big proponent in planning is, if you've got equity on your home, go out and get a home equity line of credit and have it open. because if it's open, it gives you a potential fallback. If you don't have it open, by the time that you might need it or things come up, you may be in a situation financially where they won't approve you. So get that approval now, even if it's sitting there empty. So.
Yeah, I wanted to address this chart really quick. I found it the other weekend and forgot to mention it last week. But we talk frequently about liquidity. The markets are largely driven by liquidity. Some people think, well, markets are driven by earnings, or driven by fundamentals. They're not. Maybe decades ago they were, but they're not currently. They're really driven by liquidity. So the question is where is liquidity flowing? What does it look like? And where are we in that process? I'm not sure how accurate this is, but it's something that I'm looking at as a way to discern like where we are in the cycle, just to kind of like help everyone understand. So effectively, there are times where liquidity is really loose, and there are times where it's really tight. During COVID, it was they basically printed a bunch of money. Now you could say, well, quantitative easing, it was done for like 15 years. Yes, or 10 years before that. Yes, that's true. But what ended up happening is all that goes into the bank vaults. It doesn't go into your pockets. But when COVID happened, money did go into your pockets, and it caused a huge amount of inflation, which we saw in the CPI. My groceries went up 100%. Like it was crazy. And so that's one of the reasons why we're in the K-shaped economy, because poor people's prices went up, but their incomes didn't. And so they're really struggling right now. And it's not even poor people. It's like middle class. It's people who don't have assets.
Middle class getting crushed.
Yeah, everyone's getting crushed except for the rich. So, and now everyone's going to blame it on the rich. But actually, it's not the rich's fault that this is happening. People just, it's a convenient target when times get tough and economies get tough. Let's target the rich. And the politicians are the problem. They're like, yeah, it's the rich's fault. It's really not the rich's fault. The rich are just smart enough to take advantage of it. They're smart enough to buy assets, let the assets appreciate, and they borrow off those assets. And like Elon Musk owns whatever billions of dollars of Tesla shares. He doesn't sell his shares. He just goes to the bank and said, I want a loan off my shares, and he pays 3% a year, whatever he pays, and he has more money, he borrows more money. He doesn't pay any tax on that. All the rich people do that. It's smart. Like, you can blame them, but they're not creating the rules. I don't know if you remember this, Doug, when Trump was debating Hillary, and she had that. It was like a memorable quote. Even Dave Chappelle pulled this out. I thought it was great. Where she's like, yeah, Trump doesn't pay his taxes. He's like, that makes me smart. It's like, of course I don't pay my taxes. Yeah. Because you created the rules.
100%.
I just followed the rules. I didn't do anything illegal. And then he ripped her. He's like, yeah, all your donors, they don't pay the taxes either, and that's why you're not changing the rules, because you're donors. Rich people don't want you to change the rules because that's how they keep their money, right? And let's be honest. But they're not creating the rules. The government creates the rules. If you have a problem with the government, blame the government, right? So, none of us are going to pay any more taxes than we have to, especially when it's wasted on stupid stuff. I don't mind paying taxes if it's actually, and I know actually, I'm going to make this claim. I would say virtually every single person, there's obviously a minority out there that won't, but virtually every single person would not have a problem paying taxes if the money was used effectively and appropriately. But it's not. It's wasted. $5,000 toilets and whatever the hell they pay for all the contractors to do work that they're overpaying them. You've heard the stories before, and they're all true. We overpay for everything. So if they were used properly, I wouldn't have a problem paying taxes, but it's not. It's all wasted. Most of it's wasted. Anyway, point being is going back to the money flow. So when money flows into something, that's where you want to be, right? If the government is going to start flooding the market into the defense sector, you want to be in the defense sector. If it's flooding into the consumer's pockets, you want to buy companies that produce consumer goods or whatever consumers pay. So right now we have what they call the everything bubble, where everything's overexpensive. It has been for a while, and it's really unfortunate. But now we're getting to a part where I don't know if the bubble's popped, but we're close to the end. I would say we're in the 8th or 9th inning of the bubble. I'm not sure that it's popped yet. I mean, it could happen, but it doesn't feel like we're there yet. It feels like we still have a little ways to go. And if we do, I think that ways to go has a large amount of upside. because the end tends to be a rocket ship ride to the moon, kind of like what we saw in silver in September and October, where it just spikes up. I mean, silver's up 83% this year or something crazy. And that's a commodity, like, and no one was watching it. It only happened in like 2 months. So, anyway,
Glad I got some. So
you what?
I said I'm glad I have some in the safe, and I'm glad I bought more. So
What's your address, Doug? I don't have. By the way, I don't have any precious metals in my house. If you think I do, I don't.
I live in Massachusetts. My name is Kirk Chisholm.
Too funny. All right. Well, we're gonna get close to wrapping it up here. So, this is a good time of year to really focus on these areas. Like Doug said, the Black Friday sales came out. They're still okay, but very questionable. I wouldn't say that I'm bearish or bullish after them. I'm kind of like, I'm curious. This is a good month to pay attention. I will also mention this one last thing. I'll give it to Doug to close up. We were talking about liquidity. If you want to focus on times where there's no liquidity in the markets, August, there's no liquidity in the markets. So if things go, they tend to go in very strongly one direction because there's not enough players in the markets, so people can really manipulate them. Also, the end of December, because people take like the last few weeks of December off. No one's around, especially the last week between Christmas and New Year's. There is nobody in these Wall Street trading desks. Nobody. So if you want to figure out if there's like some sort of gaming going on, it totally is. And if you identify the stocks, you can make good money in a short period of time. But you have to really pay attention because it's usually trading desks trading against like nobody. So they can kind of push the prices around and manipulate things. It's usually like a junior trader there where everyone else is home with their families and they're forced to work. Anyway, these are good times to pay attention to the markets. And if you're watching them closely, you can make some short-term profits there. But once January hits, the traders come back, and then you see where the price really should be. So anyway, Doug, take us home here.
Yeah, so I think the thing I want to tack on that we're talking about, the theme of today is, look, there's a lot of pressure, but there's also a lot of opportunity that exists out there if you look for those opportunities and you're willing to understand when and how those opportunities are going to appear. We've seen precious metal, Bitcoin, it's down $40,000. Precious metals like silver have risen significantly. The consumer is absolutely pressured. There's a lot of things that that people are going through, but here's the truth. And this is, I think, a good way to round it up is that, money doesn't make the mindset. At the end of the day, mindset makes the money. One of the things you hear is, oh, these billionaires, they make, these companies, they don't pay any taxes, they're rich. The reality is, yes, there's plenty of private companies out there. There's also a thriving stock market of public entities that are available for you to go out and buy. So if you think that company is being treated unfairly, in a way that gives them advantages that others don't have, you can have two choices. You can have a mindset of working against it, or you can have a mindset of joining into it. And that's what our economy is built off of. And you can go out and get the stock. And if that company takes advantage of the scenario, able to be financially, successful because of what's going on, then you can choose to be a part of it. And this really brings me down to three types of people. There's thousandaires, millionaires, and billionaires. And I'm talking about mindset. Thousandaires, they focus on earning. And they think the next paycheck, bonus, or sales what changes everything. They don't like debt. They like to pay everything off in cash. And they're willing to feel that security of paying everything off by giving every dollar they have away to make sure they don't owe anybody. It works. There's plenty of people who are successful in that mindset and who live very comfortably. And millionaires, they've actually learned that they need to take some of that money to save, and they need to build and to accumulate. They put that money to the side, and they generally are more of a unitasker. You've heard the term millionaire next door. It's a lot of people in America have just made their money throwing money in a 401k, and congratulations, it's worth $1 million, it's worth $2 million, whatever that might be. and you've become a millionaire that way. But it is certainly still has limits on the way on the success that it can bring you, and it's still within a mindset of in many cases a perceived safety. And yeah, there's risk in the market, but in many cases those millionaires still aren't very big fans of leverage, and they're certainly not diversified in the ways that they're making their wealth. But you talked about these billionaires, Kirk, and why they don't pay taxes. The ones that last, they think in systems. They think in margins. They think in control. They absolutely understand where it makes sense to use cash, where it makes sense to use their assets. And they also know when it makes sense to keep those assets and use the power of other people's money. They don't just chase returns. Elon Musk, I wish I had the video. He just talked about that. He does. Somebody asked him, do you have money in the stock market? He's like, I really don't. Like, if I have my money, I just continue to put it in things that I believe are going to be, huge and transcendent, like space and solar and AI and technologies. And they design outcomes. And so they asked him what he was in a stock market, his stock portfolio. He's like, well, if I had one, this is what I would do. He doesn't just hope the market keeps going up. He and others engineer income that lasts when it doesn't. And so whether it's, retirement or college, same thing. They use these as wealth strategies. They protect future income while reducing today's unnecessary losses. The reality is anyone can grow wealth in a good market. And the real pros, they know how to keep it in the bad ones. Smart money families are the ones that are mapping it all out. They've got assets, income, tax flow, risk exposure, and aligning every decision they make with purpose. And they understand to use things that are outside the box to truly be able to create safety and security. They're the ones who know that billionaire mindset, that wealth isn't just about the pile, it is about the plan. So listen, nothing wrong with any of them. Whether you're a thousandaire trying to level up, or you're a millionaire mindset protecting what you build, or you're already thinking like a billionaire, it is time to move from reaction to strategy. If you want to learn a plan on this, learn about our one plan for both families that are building wealth for multi-generational wealth, for income, retirement, or especially for families who've got these huge expenses ahead of them like college. Check us out at mergentadvisors.net. That's MERGENT, mergentadvisors.net. Let's make sure your wealth doesn't just grow, that like these billionaires Kirk talked about, it endures.
Awesome, Doug. Well, I appreciate you coming on the show. That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, wealth manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.